And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Prep, my futures friends and family. It's Monday, January the 30th. We are slowly but surely getting our way through winter up here in the Northern Hemisphere. As always, our focus is going to be on accurate context, always thinking about risk management and patience. Hope you had a nice weekend. I was pretty under the weather all week, and I'm feeling a lot better now, and I'm looking forward to feeling a lot better with a little bit of help from one of our friends. If you are already in the markets, hopefully you've got things going your way. It is going to be a busy week in numbers, a busy week in information, a busy week in earnings. It is going to be a busy week when we're looking at the economic information due out this week. We don't really have a lot this morning. 9:30, the Dallas Fed manufacturing index is due out. Excuse me, we've got a couple of short-term bill auctions. But looking throughout the week, we've got a lot. Tomorrow, employment cost index, Case-Shiller home price index, FHFA home price index, Chicago PMI, and consumer confidence. All tomorrow morning. The Fed, the FOMC meeting begins tomorrow. Wednesday, ADP employment report, PMI manufacturing index, ISM manufacturing index, construction spending, job opens, labor turnover, EIA petroleum status report, and then, of course, tomorrow at 1 p.m., the FOMC announcement. Thursday, jobless claims as usual, productivity and cost factory orders, natural gas numbers due out, and then the biggie on Friday, the unemployment numbers due out. So tons of data due out. A lot of it is going to affect the markets. We're going to see the markets doing probably a considerable amount of hedging and positioning for this week. We've got so far this morning, U.S. stocks following Europe lower into a busy week again of data and earnings. The three top central banks are holding policy meetings Wednesday and Thursday. And also we have 3 or 4 of the top 5 companies by market capitalization are due to release earnings this week. We've got Meta on Wednesday, Apple, Amazon, and Google all on Thursday. Add to that 3 days of employment numbers plus confidence, ISM, all of these. We are set for anything can happen this week. 100% be ready for anything. Make sure you are using stops. If you're going to be trading into any of these numbers, make sure, again, you're using stops to protect yourself. We have crude prices following most of the other assets lower this morning, even though the rig count on Friday showed a drop down to 609 off of a November high of 627. So we've got fewer rigs pulling oil out of the ground. We've got the White House saying they're thinking about starting to refill the strategic petroleum reserve at around $80. We're currently at $78 right now. We've got this market holding below weekly kickoff low as we speak. We're going to see how this looks on the charts here very shortly. But as always, we're going to take a look at the VIX. VIX is up about 7%, but still below 20. Dollar index down slightly at 101.84 last I checked. The yield on the 10-year continues to creep higher, up around 3.56% this morning. As always, please make sure you hit that lucky like button. Share, comment, question, feedback, heckling, love are always welcome. Make sure you subscribe to our YouTube channel so you get notified when we do go live. We're back to regular schedule for group coaching today. There is the link that I just put into the chat for the group coaching session today at 12:30. Looking forward to seeing all of you there. And then, of course, after that, we've got Make Hogue Money after that. So busy day here as well. Good morning, everyone. We've got Brody the first in the room. You win the prize. Timothy, Rob T, Caprice, Jason Bartles. Good morning, Shaw. Good morning, Mike, Don, Caesar, Dan, Rooster. Good morning, Theo. Good morning, Scott Saw. And he conquered. Vince, good to see you this morning, my guy. Alejandro, JM, Bill Phillips, Kevin Laffey, good morning. Naveen, Charles, Stephen, my brother Rick. Randolph is back. How was Mexico? I hope you ran into Winthorpe and Valentine while you were down there. Anthony Bell, Dowitzer, Travis, good morning. Allie, haven't seen Ali or Allie in a long time. It's good to see you again. Haggle Matters, Kevin, good morning. Fred Decker, happy FOMC week, everyone. Philip, Rusty Golfer, Terry King, Shaw Cunningham, Octoraps, good morning. Naztec, Jay Brayman, Sarah Hall is good morning. Prayers and love to you as well. Columbus, JT, Will, and Ryan. It's always a pleasure to see everybody here this morning, and we are again looking forward to a interesting, hopefully profitable, but challenging week in these markets. Lobster, cracked crab down there. There you go. Swapnil, good morning. Swapnil, good morning. I'm sure Rick had más cervezas down there, and as well as lots of other good things. We're glad to have you back, Rick. We'll see you probably with me tomorrow morning for the early session of the Make Hogue Money. We're looking forward to it. Tomorrow morning, though, we do have a special guest. Matt Hoyt is going to be discussing how he looks at and uses the Andrews pitchforks to look for opportunities. We're still going to be looking to make me money, but we're going to have Matt talking about with some of his ideas. So we're looking forward to that again. All right, let's get into the charts now. We're going to start with the E-mini S&Ps, the daily chart. Actually, we're going to start with the continuation chart, as I've been tending to do on Mondays, looking at the longer time frame context. Here we go. All right. So looking at the longer time frame context, I mean, the market has been putting in lower highs, lower lows to a point. It started to put in higher lows here, and we've gotten a situation where the market is attempting to kind of break that market state, whether it's the medium time frame balance that it's been in or the longer time frame break to the downside. Short time frame, the market is higher. We're still kind of fighting with this upper extreme here. This spike to the upside was a CPI number. I'm viewing that as kind of an anomaly in the market. Take a look at the daily chart now. All right, so volume wasn't great on Friday on the push to the upside, but that doesn't scare me. We did add 9,200 in open interest on this push to the upside on Friday, which may lead us to believe we've got a few trapped longs up there. Now, the market has been putting some pressure on those here this morning. Take a look here. Friday's high on the daily chart here shows a pretty decent degree of excess. So price, it appears, got too expensive. Buyers were done. Sellers took over, and they are still in control here. That's not what I'm looking for. I'm looking for this. There we go. So here's that push to the upside that puts in last week's high. We've got overnight inventory to the short side. we seem to be kind of reconciling some of that. We're going to be probably opening with a gap to the downside. So if we can't close this gap relatively early, it may mark a bit of a change in the short time frame direction in this market. Take a look at this 200 session moving average on the 30-minute chart. Okay, when we rejected below here, it's been holding and it's starting to hold here again. So value low from Thursday looks like an interesting opportunity because it's put in the overnight low. There's a lot of big anticipation for what's going to happen this week. It wouldn't surprise me if we just found an area to range today in anticipation of a lot of this news. There's no major earnings coming out today. Those are all coming out later on in the week. So I'm going to keep my expectations reasonable today. Take a look at the TPO chart here. So this is Friday's session. It's a normal variation day. The lower extreme of the regular trading hour is the low of the initial balance. It's kind of a normal variation, neutral type of a day. There's a few little anomalies and little holes in here that are kind of telling us that this upside move isn't that confident. You can see the overnight traded back to and tried to fill in some of this information here that kind of remains iffy in the day in the profile from Friday. The one thing that I've noticed here about the S&Ps is this upside move was relatively organized. If you can see here, there's a TPO point of control here that remains unchecked, and there's a TPO point of control down here that remains unchecked. I know it's difficult to see. The volume point of control has been checked most of the way up, at least through yesterday. Okay, we checked this one. We got a long way to go before we can find a volume point of control that has remained unchecked. We do have a couple of TPO points of control down here that remain unchecked. But you're going to see something on the NASDAQ that looks a little bit different. So this upside move has been far more organized in the S&Ps than it has been in the NASDAQ. We got a little bit of a weak low here from Thursday that may come into play today. We're still potentially repairing this day on Wednesday. If we get into that level, it's Monday. I'm very much after the weekend that I had thinking about really trying to stay patient and look for better trade areas, trade locations. Here's I'm going with the NASDAQ now because there are a few things to show you. We've got the off the high trend line that we're holding above now. Look what else we're holding above. We're holding above the 200 session, the 100 session, the 50 session. This is all friendly to the upside, but this is technical stuff. Fundamentals are all over the place this week. We got to pay attention. Here's the daily chart. All right. Well, we're inside the extended trading hour range from Friday. We're below that in the E-mini S&Ps. The NASDAQ is presenting as stronger, but there's weaker structure down below. Volume maintains. We added about 800 in open interest on Friday, so probably less of an opportunity for us to trap a bunch of longs up there. Take a look at the 30-minute chart. No gap. Overnight inventory is short, but we don't have a gap. Okay. Inside regular trading hour range, no gap, overnight inventory short. Look at our overnight low. It's basically the low from Friday. That may end up with a degree of support. Now, here is what we're talking about with the TPO chart here. Okay, this includes overnight, but still, even with the overnight, we've got a naked we got a naked volume point of control here, naked TPO point of control here. Even with the overnight, we have a naked TPO point of control here and a naked volume point of control here. We've got a lot more visuals and a lot more unfinished business below in the NASDAQ because the NASDAQ has been presenting as the strongest of them. So if I'm thinking that one of these markets is going to lead us higher, it's probably going to be the NASDAQ. But again, we've got lots of tech earnings due out later on in the week. So again, I'm looking for the market to fall into some sort of range at some point today and give opportunities on the extremes. Here's the crude oil. Let's look at the continuous chart first. Okay. Long time frame structure is to the downside. It seems as though that's wrestling with the 100 session moving average over the last couple of weeks. Looking at the daily, we've been range bound for 2 to 3 weeks. This is now changing. Okay, this is a move that I don't know that I would have necessarily expected. Technically, it looks like it's a round top, but with the information about the Strategic Petroleum Reserve, maybe they're throwing us a curveball here, and they're not going to do that. These extremes were relatively solid for the last 2 to 3 weeks. This is a change. Range-bound rules, we fade extremes. Breakout rules, if we show signs of acceptance, we have to go with this breakout. Take a look at the 30 here. Okay, a trend day to the downside, which basically took the entire area of balance or range that we've been in. Okay, they added 20,000 in open interest on this push to the downside. There was also a end of day positive delta of about 500. So this might be an indication that longer time frame traders sold this market, but on the commitment of traders, there is a pretty large long speculative position in crude. They're getting hit now. So we've got a naked point of control here, a naked point of control here. We're opening with a gap. If we can't close that gap relatively early, we show signs of acceptance at lower pricing, we've got to go with the breakout outside of balance. Check out the TPO chart here. So here's our push. Weak high, excess. Weak high here, but we do have excess at the high here. Continuation. A relatively weak low here. We've opened below it. Lots of visuals down below here to kind of fill up. Naked TPO point of control, TPO point of control, volume points of control, all of this leading us to potentially continue this move to the downside. And again, with the gap, if we can't close the gap relatively early and the breakout outside of balance, the idea is to sell strength in this and to see if the market can continue to push lower. Seems kind of strange. Here's gold. A lot of indecision in this market. Take a look at the continuation chart. Should be trading April, of course. Here's the continuation chart. Here's February of 22. Here we are. End of January in 23. Right back to it. So medium time frames to the upside. Short time frame is range bound. Take a look at this on the daily. One, two, three, four, five, six, 7 days in range. Very solid highs, very solid lows. Basically last week's high and low. So in range bound trade, the strategy I use is I look for longs at the lows and sell shorts at the highs. Until proven wrong. We've got to break out of this before I'm going to change that strategy. The short time frame structure to the upside, I believe, still remains intact. I would call this an upside digestion. Look at all the long shadows on the bottoms of these. Seems as though buyers come in every time the market gets near this low. We don't know if they're going to continue, of course, just something to keep in mind. We lost 11,000 in open interest on Friday. Could be a function of rollover. Doesn't mean that we took out a whole bunch of longs. Just a lot of traders liquidated positions, probably in the February contract. So still a lot of indecision. Take a look at the TPO chart. Where are we? Right in the middle of range and value. Our IB extreme high is the high of the regular trading hour session yesterday. We have excess on both sides. We are right here in the middle of range and inside of value. Stay patient. Stay patient. It's a random walk between our highs and our lows of the current area of balance that we are in. Short time frame control. Be smarter than the average bear. Stay patient. Let the market establish extremes in the initial balance, at least, before really looking for opportunity here. I mean, we don't really have anything that important until 9:30 this morning that could affect the markets, and that's a low impact number. Here's the euro. All right. Take a look at the continuous chart. Would you say longer time frame structure is lower, but short time or medium time frame and short is higher? Medium time frame structure is good to the upside, but balance in the short time frame. That's what I'm going with here. Here is the daily chart. We're going to look a little closer here. So very similar to what's going on in gold, and I didn't really mention this in gold, but I want to point this out in the euro. We have an area of balance here. Okay, our last area of balance was here. There was barely any overlap. Our last area of balance before that was down here. There's space between these areas of balance. There's no space between these two areas of balance. That can be indicative of a medium or longer time frame upside auction losing momentum. We've got lots of shadows on the highs here. We got lots of shadows on the lows over here. This is still upside structure, but indicating that momentum, again, maybe falling off. Look at volume. Volume falling off a little bit. We added 5,900 in open interest on Friday. The euro has not been suffering for open interest. It's been increasing relatively steadily this entire way. So I'm putting this market on notice. I'm giving it basically a C as far as upside performance is concerned. Take a look at the 30. We had this trend line here. Let me get it in the right spot here. It does not want to cooperate. Okay, 1, 2, 3. We had this trend line here. I'm not sure if this is going to be impactful for us. Looking at the 30-minute, we had some overnight inventory to the long side, which is already reconciling. We did open with a gap. We have been so far, I think, unable to close the gap. Looks like we got real close here, but I don't think we closed it. Take a look on the TPO chart here. No, I think we missed it by one tick. Missed it by that much, so no gap close. We have a weak low here yesterday, an unfinished downside auction, but the inability to close this gap gives us the opportunity to look for longs until proven wrong. Yesterday, Friday's IB, neither the high nor the low of the regular trading hour session. Take a look at the 10-year now. All right. So we've got to move to the upside here. We've got almost a head and shoulders here, right? Now, if this is the left shoulder and this is the right shoulder, last week's low is pretty much the neckline. So the neckline here in the 10-year is going to be somewhat important to us. Take a look back on the continuation chart. Long time frame to the downside. Medium time frame to the upside. Short time frame to the downside. It's a mess. But if this is going to continue and we find acceptance below this neckline, the measured move to this takes us down to about here, 112.13 and change. We've got to get through weekly kickoff low, which has been supportive in the area of balance that I believe we're currently in. Take a look at the 30. So we've opened with a gap. We've been unable to close the gap. We've started to use last week's low here as potential resistance. If we can't close the gap, a move down to our weekly kickoff low could be enough to show signs of acceptance at lower pricing and push our market down to that 12, whatever, 16 it was. That's the continuation of the potential head and shoulders that we're seeing. Take a look at the TPO chart. Week low yesterday, Friday I should say. Week low on Thursday. Week low on Wednesday. Excess. But this market leaves so many weak highs and lows, it's hard to know what to think. There's so many end of profile nuances. One thing that does point out to me is this is a very wide, even for the 10-year, very wide profile. Leads me to believe that change is coming. Perhaps that change is to the downside. We're starting to see the yield on the 10-year creeping higher here, so it's still at 3.55% right now. And coffee went off. Gotta start that up again. Look at the nat gas. I didn't even bother looking for any kind of important inflection levels to the downside here. The continuation chart has everything looking lower. Longer, medium, short, everything is weak here. Everything. Well, here's our last week's breakout below weekly kickoff low. I'm going to be focusing on that for opportunities back to the upside. Look at the doji we put in here on Friday. A little bit of indecision coming into here. We added 9,600 in open interest, but again, that can be a function of rollover. Take a look at the 30. So we've gapped. We have a weekend gap. This market has a tendency to do that. A weekend gap. If we range here and we gap open tomorrow, this is going to leave an island bottom. If overnight inventory is mixed, take a look at the TPO chart. So a normal variation neutral day on Friday indicates potential for change, and it's seeing that change now. I don't know if we're going to continue to see sellers come into this market, if we're going to range, if we're going to pull back. I don't trade this market. I just find it fascinating, so I keep looking at it. And I don't recommend not trading or trading any particular product. It's just not for me. Captain Price. Yes. We can expect volatility at some point this week, and at a lot of points it's possible. Lots of langosta Mahi mahi. Man, that sounds good, Rick. Bear goes long. George. Good morning, everyone. Vaughn. Dollar strength seems to be the common denominator with oil down, etc. Sure. All right. So we know that we've got a lot going on this week. I'm going to be patient and keep my powder dry as I can for the opportunities that come. If you know me, you know I don't take a lot of risks taking positions into major economic releases in those types of situations. I've done so before. I've found that over the years, I'm about even, so I don't play. It's very difficult to create any sort of strategy that is going to consistently help you to profit in those situations. So I don't. I look for the market to give me the opportunities that I'm comfortable with and that I look for, and I know over time are going to profit for me. So that's my thing this week is I'm not going to be holding a position at 1:00 on Wednesday. I'm not going to be holding a position before the opening on any day this week, which a lot of these numbers are coming out prior to the equity open. And I'm really hoping that if you are going to participate, that you are successful in bringing profits. That's always my goal here. That's always our goal here at Top Step, is your success. So I look forward to seeing everybody later on for the group coaching session and Make Hogue Money. And then, of course, at the end of the day, I'll be doing the market reflection, at least for now. And I look forward to seeing you. Take your deep breath. Hope you guys do that with me. Stay humble, grateful, creative, and centered in your trading. If you find you're getting on tilt, walk away, let that venom go. Remember, forgiveness is for you. Trade well today. Say a prayer for peace. Be kind to yourself and others. And I will see you at 12:30 for group coaching. Trade well. Have a good day.